Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice. Bitcoin is at April's midpoint on possible support, but the macro backdrop is becoming increasingly challenging. The next big move may be closer than many traders think. Bitcoin continues to struggle beneath a major resistance zone after rejecting the recent breakout attempt. Since yesterday, price has rolled over and is now trading near 72,900, sitting directly on April's midpoint and near the lower boundary of the ascending channel that's been in place since the February low. Bulls can point to several layers of support below. Biweekly support sits around 70,800, while the 200-week EMA comes near in 69,600. Those are significant levels that could attract buyers if Bitcoin continues lower, but it would be a very hard buy for bulls since we are trading below 2025's low and strategy's cost basis. The problem for bulls is the broader macro backdrop. The US dollar has reclaimed its 200-week EMA, suggesting dollar strength may be returning. Historically, that's not ideal for Bitcoin. At the same time, the 10-year Treasury yields remains elevated near 4.5%. Financial conditions are relatively tight, and crude oil appears to be breaking higher from a wedge pattern. Rising oil prices could add inflation pressure and further support the dollar narrative. Meanwhile, volatility remains extremely low, with the VIX near 15.8. Markets are calm for now, but low volatility environments often don't last forever. From a technical perspective, Bitcoin remains trapped between major support and major resistance. Below, a loss of April's midpoint could open the door for a test of 70,800 and potentially the 200-week EMA near 69,600. The next major catalyst arrives in mid-June, when both the Bank of Japan and the Federal Reserve meet within days of each other. That creates a significant macro window where the dollar and the liquidity expectations could shift rapidly. For now, Bitcoin remains range-bound, but the pressure is building. Watch the dollar, watch the yields, and watch these key support levels closely. By the way, if you like the content, please like and subscribe. On the monthly liquidation heat map, you can see when liquidity builds up at certain price zones, Bitcoin often moves toward those areas to trigger liquidations before reversing. As you can see on the chart, a bigger chunk of liquidity building up around 60,000 than above price. And that's why I posted on X. This single on-chain indicator has predicted the last 4 Bitcoin cycles with scary accuracy. Bitcoin moves in cycles and the 4-year moving average aligns almost perfectly with the halving cycle. Bitcoin rarely stays below this line for long, and bull runs often begin after reclaiming it. This chart has marked the exact bottom of the last 2 bear markets. CBDD tracks the value of coins' moves relative to how long they were held. Historically, it has identified Bitcoin's macro bottoms with incredible accuracy, making it one of the best accumulation tools. On the chart, you can see price still hasn't touched the line. The KEMA moving average still hasn't entered the accumulation zone. It is a sophisticated moving average that adapts to market conditions. Unlike traditional moving averages, KEMA automatically adjusts its smoothing based on market efficiency and volatility. For more interesting on-chain data like this, please follow my channels. Have a nice day. Bye!